Hey everyone, Kashi Investor back to another video for today. So let's talk about Afterpay. Obviously a huge acquisition by Square back then, now Block, and a huge part of the future of this company because you don't spend that much money for it to be just a small feature in your ecosystem. Obviously there was more to it than just offering buy now, pay later. They can now also target the large customer base and merchant base that Afterpay has. Square doesn't really have such a big presence in Europe. Afterpay has a presence outside of the United States, so that helps as well. But last week we've gotten some numbers about how the company has performed, and sadly it hasn't performed great. So we're gonna have a look at the numbers. We're obviously going to see on stockcard.io whether or not we're gonna add more shares to our portfolio, because most of you know my personal portfolio Block is my number 2 holding. Number 1 is Tesla. In the portfolio, the channels portfolio, Square is there as well. Block, I always confuse the names. Anyways, doesn't matter, we're gonna see that. If you wanna follow that portfolio, it's free to follow. Link will be down in the description below. As always, if you want, click, it's free to follow, and why not? And then you can use the platform as well, because it's pretty simple to use, all right? Let's be honest, I use it because it is very simple and it gives you a lot of information. So we're here on the card for Block. It tells you right away, high growth potential, stable operations. Right now the sentiment, pessimistic investors, which might mean that the stock is oversold. It has underperformed the market in the short term. I'm going to show you what happens when you look long term. So you can see right here, 1 day return, not great. Year to date return, not great as well, down 25%. 1 year return, same thing. But then if you look 3-year return and 5-year return. 5-year return, you're up 1,000%. 3-year return, you're up 187%. So you see what happens when you look at it from the long-term perspective. Obviously in the short term, you can see some ups and some downs. That's why we like to invest in the long term, and especially with high growth, unprofitable companies, you cannot expect it to be smooth sailing each and every year, each and every month. But let's go back to the great overview here. It's a fairly priced stock. Obviously right now with the price being much lower. So 1 year ago from the highs, 53% down. So obviously valuation wise, much better today than back then. And obviously, but today the company is doing much better than back then as well, since the seller side of the business, a very, very important part of the thesis here, is performing very well. Now that the world is reopening, the economy is reopening as well. The seller side picks up some steam when the other side, Cash App, might be decreasing a little bit. Analysts probably agree as well, because you have 29 buy ratings, 9 hold, and only 1 sell. You can see here the analyst price target. The average one is $179 or so. Right now the price is 121, so a quite small but nice upside. You get some more general information here. Obviously PE ratio is still extremely high because it's barely profitable. Price to sales ratio much better, much lower right now. You can see here free cash flow, long-term debt, earnings per share, etc. Then when we talk about high growth potential, in this case with Square, it belongs to a couple of categories. So technology, infrastructure, peer-to-peer payment system, everything that's green here means that they are outperforming that market. So that's great to see. You can see mobile payments, obviously blockchain-based payment platform as well. We know Jack, the ultimate Bitcoin maximalist. Unfortunately, I don't really see any other cryptocurrencies going on Cash App, which is a shame, but we've talked about that in past videos as well. So you can see that it's pretty well positioned in most, if not all sector, but here technology, it is growing in neutral pace, 5%. But let's talk about Afterpay. At the time of the purchase, Block projected growth was 70%, but last quarter they corrected themselves and they say that they expect around 25 to 30%. So that's also one of the major reasons why the stock took a hit, because when you acquire such a company and you pay a pretty nice premium, you expected 70% growth, and suddenly that gets sliced in more than half. You can expect the market to react. So what did actually happen with Afterpay? So the numbers are pretty clear. Now, before I continue, a little plug. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. During the first half of the fiscal year 2022, Afterpay's poor performance includes $176.7 million in bad debt, which were much higher than the year before at $72 million. Another contributor here is the rising operating expenses, up nearly 287% from $63 million to $212 million. With all of that bad news, they increased income by 55% to $645 million. But it doesn't really matter much because if you look at the whole balance sheet here, it cannot continue like this. The Australian buy now pay later market has a worldwide high of 12 publicly listed companies on their stock exchange. That's the most out of the whole world, which is pretty crazy, which means that the competition is there, or maybe every company thinks they can be the next Afterpay, the next Klarna, Affirm, etc. So they get listed, lots of money gets poured in, then eventually it's just a bad investment. Now you might ask yourself, so are you bearish on Block? Are you bearish on Afterpay? I thought you liked this acquisition. I do like the acquisition. I think it's a great way for Square Block to expand in other markets outside of the United States. Yes, they did overpay, as I said, multiple times, but it was an acquisition that they needed to make. Again, it's great that they paid in stock and not in cash. So there's already one positive, let's say. But of course, they will need to check and see what went wrong and how things can improve, because they're not profitable, far from it. Right now, yes, income did increase by 55%, but as you've seen, the losses and the expenses are also extremely high. Now, if you need an explanation what Afterpay does and how it differentiates from Affirm or Klarna. So Afterpay, first of all, you can use it on the app because they have an app. Afterpay now integrated with Cash App, where you can see all the shops that offer Afterpay payment options. And then you can just go online on stores like Lululemon, maybe other Apple, I don't know who works with them, but you can see at the checkout with Afterpay, and that's easy to use. Now, it's free to use. You can sign up for free, doesn't cost money. But here are the extra information that you might want to hear. So first up, how do they make money since it's free to use? Well, it makes money through fees. Yes, it might not be ethical, meaning you are using their service and the only way that they will profit from you is if you don't pay on time. Now the fees are up to $8, or if you continue to be late on your payments, then it's capped, the fees are capped at 25% of the value of your order. So yes, you might say that they only make money when you eventually lose money because you're late on your payments, but on the other hand, they're incentivizing you. If you don't want to pay any fees, pay on time. Because right now what happens with buy now pay later, the whole market is basically you're giving people credit and maybe those people can't even pay back what you just gave them. And yes, we all know what happened in 2008, the financial crisis. Unfortunately, with buy now pay later companies, it's not regulated, all right? They don't have a credit check system. You don't really get affected on your credit score. Yes, sometimes they perform a soft credit check, but that does not impact your credit score. Now, yes, if you use Afterpay a lot and you're on time, etc., then fine. They will target you, they will put you as a great customer. But if you use the service and you're never on time, then they will probably tell you, look, you cannot use Afterpay anymore until you pay back everything you owe. And even after that, they might not trust you anymore. On the other side, you have the likes of Affirm. Affirm does not charge any late fees. the way they make money is through interest. So when you go and check out with Affirm, you know exactly how much you're going to pay. You're going to pay what you want to buy plus interest, and that's about it. There's no late payment fees, etc. Now, obviously, you can choose which one you prefer, but to me, to say that buy now, pay later is not really ethical because you only make money when other people are paying late and then there is a late fee, etc. It's double standards, I would say, because if you're not late, because they're doing you a favor of offering you a service that lets you buy, let's say, a couch or whatever for $1,000 instead of paying right now, you can pay that $1,000 in 4 months or maybe more, so it weighs less on your bank account. Now, if you choose that option, it's your responsibility to pay on time. If you cannot control yourself and you're overspending and then you're in debt and then you have to pay late fees and then you're even more in debt, well, then you shouldn't be buying a couch for $1,000. So what's going to happen next? Now, obviously, since Afterpay has been integrated with Cash App, it's going to be offered through the seller side, through the Cash App side. The whole ecosystem is great. Now, since they now have way more data, maybe they can control it a bit better. Maybe during the pandemic, etc., they've been giving too many people too much credit, in a sense. Maybe right now that's going to stop and that might improve the balance sheet. Because otherwise you're really going through a 2008, 2007 type of situation where you're just giving people, well, the buy now and then you pay never type of scenario. Now we're obviously going to see the results at the start of May. I believe May 5th is when Square Block will report their quarterly earnings. So we're going to have more information there. I'm obviously going to cover that as well. So that will be it for this video. Obviously, do share your thoughts down in the comments below. And if you enjoyed this type of videos, do leave it a thumbs up. And if you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, I'll see you all in the next video. Bye bye.